This is Scott Becker with the Becker Private Equity and Business Podcast. Today's podcast is on RH, Restoration Hardware, and we'll call this RH Sinks. So this is a fascinating story, and there's a couple things that are behind RH moving in the wrong direction. The most publicly noted one is Berkshire Hathaway, Warren Buffett's firm, deciding to get rid of and reporting that they've sold all their shares in RH. And so that was the ostensible reason for the decline in the stock yesterday. It fell about 9%. But there's more to it than that. I mean, the reality is the fundamental business is kind of challenging, and the customer experience at RH is kind of challenging. I think overall, people love the furniture at RH. They've got great product. What they have that is something that maybe they think the affluent want, but that they don't, is they've got the customer experience problem of when you walk into an RH store, you are immediately evaluated based on what they perceive is your wallet size. So, and they're one of the most fundamental retailers at treating you like that, rather than like you're there to shop and looking at you as though you're a great customer regardless. They've got the immediate wallet biopsy type of approach. And I think in the long run, this approach to business is a very challenging approach to business. A couple of things I'll note about RH. One, Warren Buffett knows the furniture business about as well as anybody, and knows the value furniture business because he was one of his original investments was a famous furniture retailer in Omaha. So when Berkshire makes a decision to drop RH after being so excited about RH, we think that they probably have a good sense of it. The other piece of this that people sort of might miss is this concept of luxury retail. Luxury retail is this very interesting spot as there are a small segment of the population that continues to do well and has the economics to buy everything that's luxury retail. But you have to remember, a lot of luxury retail is pitched to people that aren't that affluent, but that can buy luxury retail and feel affluent. And it's that piece of the market, which is a very big piece of the market, that gets crunched a great deal as soon as the economics get a little tougher in our country. And that's part of what you're seeing. It's not that the 1% is really struggling. A lot of them still have disposable wealth, but it's that next 20% that want to act like the 1% that have to be a lot more careful. And I give them credit for being careful, but that's just the reality of it. Thank you for listening to this version of the Becker Private Equity Business Podcast. I am one that loves to hate RH. I do love their furniture, though, and we do shop there sometimes, but I do love to hate them for that perception of they're always evaluating exactly how you act or look and whether you're going to spend enough money, because I find it to be one of the most obnoxious of these, like some of the car dealers are too. Anyways, thank you for listening. If you agree with this, don't agree with this, I'd love to hear your thoughts. You could text me at 773-766-5322. And in fact, if you're the first person to text me on this particular episode, call it the RH episode, and say that in your text, then we'll send you a $100 Amazon gift certificate. Thank you for listening.